Hi, everyone. Good afternoon, good evening, and good morning, anywhere you are joining us from. And once again, I say very big welcome to everyone. Welcome to our financial modeling bootcamp. It looks like we have few people online currently. So let me ask for our suggestion. Do you think we should wait for them, or we should just go ahead? All right. So let me hear our opinion. You can type in the chat box.
Hi, Victor. Good afternoon. Good afternoon, everyone.
Hi, Frederick. How you doing?
I'm fine. I think if we can wait for them for a while before we start, just give them some grace to be fine.
Okay, thank you for that. Any other person? What's your thoughts? I'm a very timely person, right?
Good
Okay, yeah,
afternoon,
right.
everyone.
Sure. Hi, Rasha.
I agree with Frederick. If you just 5 or 10 minutes, let's just wait for the this.
Okay, all right. So thank you for that. I'm a very timely person, so when I say one, I like to to start that. So, thank you for that. But you know what? Let's get this session started so that next time they will also know that hey, when we say one, we mean one. Right. I'm not sure that's a very good approach to time management. You know, when you say one, quick starts. Coming 102, 103, then you know that uh, you are late already. So just go, we get started, and hopefully they will join us. So welcome to our session two, right? And I hope you enjoyed the last session, which we had a discussion around what we call business cycle and accounting cycle. And as I mentioned to us, that it is all about business. All right. And we took a step further to even be able to think about that two approaches that we said we have to modeling, the mechanical and the artistical part of it. So we said the mechanical aspect of it is you understanding business, understanding how management think about business, understanding the reality and the cycle of business. And the artistical part is where we go into Excel and we start putting our models together. So we said we should, part of the task that was given to us, as only any business case of the type, use that our business cycle and accounting cycle to create a business case. And we also took a look at how that now flows into our project, into our financial model. So we said, number one, you want to start a business, you need to be able to um, identify some macro and general data that can affect your business. Right, then after you've done that, which you also do as part of your visibility, you're trying to get things together. Then after you've done that, you're sure if there's market for your business, then go ahead with the financing, which is the first cash that needs to come into the business, because cash is king. We discussed that in our business cycle. Then you get the cash, you let us know what are the things you want to use the money to do. All right, I want to buy assets, buy this equipment, buy that, buy this. Then immediately you start the business. Now, say you start generating revenue immediately, so you need some working cash as part of the working capital in meeting up the uh, business obligation, pending when the business can now start generating revenue that can sustain the business. So today, we take it a step further. Before we get started, uh, let's even understand what we call components of modeling. Now, during my school days, one thing I really struggled with was me trying to understand what is model. Go to the economics class will tell us this is something model, this is something model, this is something model. And I'll go back and like, what is this model? Is this model is it human being or what? Right? I just keep racking my head then, and I couldn't find the answer. So what do we call a model? And the truth about it, even this world that we are living is a model on its own. So your ability to be able to define a concept in a well simplified terms will really make you understand what the concept is saying. Right? So now, what is a model? A model is a concept, 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 a conce Before you call anything a model, what must it entail? So now when we hear anything about components, so component of anything is basically what are the things that we need to put together before we call this thing this name. I have one good example that I use most times when I ask you what are the components of a car, which means before you call anything a car, what are the things that needs to be put together? You definitely need to have your engine, have your bonnet, have your front wheel, have your steering, just everything that you need that needs to be put together before you call something that's compound name. So when you hear model, model is also more like a compound name, one or two things that you need to put together. And even every day we build model. As I said, this word itself is a model on its own. Before you call anything a model, it must entail three things. There must be input, there must be calculation, and there must be output. Three things that you need before you call anything a model. Let's keep that in mind. You need inputs, which are more like your raw data. You need your calculation, something that picks the input, use it to run the calculation, and give out the output, which is the result. And as such, any changes in inputs will affect the calculation and will also affect our output. In fact, let me give us one good example. Let me open my Excel, right? And inside this my Excel, I'm going to type one somewhere here. So let me put it as input. I'll type 2 here as well. Let me also put that as inputs, cell style. And I'll come to another cell and type equal to the cell that contain 1 plus the cell that contain 2. Now, let me ask us, do you believe that this is a model? You can type in the chat box, just type in the chat box. Do you believe that this is a model? So let's make it very, very interactive. So we can type in the chat box. Do you think what we have on this screen is a model? This our contribution is very important. Do you think what we have on this screen is a model? Thank you. Definitely, this is a model. Why? Because we have one input, we have another input. Then inside here, we have our calculation that has resulted in our what? In our output. So which means anytime you are doing anything in Excel, you have one input somewhere, you have another input, then you go to another cell, you do the calculation, and it gives you the results. It's basically a model. And the reason why it's called a model is because I can always come back to where I have this one and change it to 5. And what will happen? It will automatically affect my calculation and affect my output. Can go back to the second one and also change it to another value, and my output automatically updates on its own. Once you have this is what we call a model. In fact, in our economic concepts, they will tell us that y is equal to a plus b, right? A plus b. They used to add x to it, but let's leave the x for now. You know that this is also a model because of what? Now, in the economics, they will call it dependent and independent. So they say A and B, they are independent, while Y is dependent, because any changes in A or B will definitely affect the output, our result of Y. So in basic term, anytime you're anything a model, just know that you have inputs, you have calculation, and you have your outputs. Once you understand this, it will be easy for you to flow when it comes to you building a model. Now, for the inputs are more like, you call it assumptions, some call it inputs, all right? In fact, some call it drivers, because what? It drives your outputs. Any changes in them, these are more like hard-coded value. Hard-coded value that can affect the results of your output. So I said it's like a flow, so it's like a story. We hope to start with 5,000 customer base, and we hope they will increase by this percent year on year on average. So which means those year on year on average, which we've input, maybe 5%, 10%, can be changed and can affect the result of our output. Input, then you have our calculations. So schedules where we do your workings, where we do our rough work. In fact, the worksheet is what we usually call the engine room because it connects to our inputs, process the result, process the inputs, do the calculation, and then feed it out to our what? To our output. Now, when it comes to the output, it is the output that determines the kind of model that we are building. So you can have different kinds of model, but it is the output that now describe and determine the kind of model that we are building. For our typical financial model, definitely we are going to have our three financial statements: income statement, balance sheet, and cash flow. Now, once you have these three, we can now do our analysis. In fact, almost every other thing you do in financial model, they are picking their variable from these three financial statements. So as a modeler, as a sound financial modeler, your ability to be able to build a standard income statement, balance sheet, cash flow, at times they call it three statements model, is very, very important because that's the whole thing we are doing. So when it comes to financial model, this is where I want you to think about it and see it. And that's one of the reasons why they said one of the most important skill you need as a financial modeler is accounting, because there's no way to it. Now, this is what I want you to understand, that you kind of think from the angle of output. Oh, I need to build income statement, balance sheet, and cash flow for the next 5 years or irrespective of the period, right? And you go to each of these line items. Oh, this is income statement. What are the line items that I need? Right? Then you now do a work back to ask that, okay, what are the things that I really need to get this line item in my income statement? What are the things that I need to get this line item in my balance sheet? So once you can have your income statement and balance sheet, you can have your cash flow. So once you can establish that thinking, irrespective of the industry they take you to, it will be easy for you to understand what drives this line item and what are the things that I need for this particular line item. And that will also guide you in asking the right question. So look at an accountant that wants to create a financial statement. You know what they will do? They will pick the actual business performance. So they will ask, oh, let's say we are selling a product. Oh, how many products was sold at this particular period? What is the average price? What is the price for each of these? They will multiply that. They will say, oh, yes, that's our revenue. They will go again and ask, oh, how much did it cost us to produce one of these products? They will do that. They will recognize that as cost of sales. What are our operational expenses? What are the salaries? What are the utilities? What are the running expenses? They will collate that together and add it and make it operating expenses. Do we ask again, oh, do we have loans that we've given out? Do we have loan that we've taken, right? What is the interest expense that we need to pay? They will pick that. So that is more like the best way for you to understand it. So all you need to do, keep in mind, I want to build the income statement and balance sheet. What are the things that I need for each of these line items? So to add to my explanation, let's take a look at a structure of an income statement. As I said, financial model is not just you build and live. You should be able to think, ask questions. Is it making sense? Is it not making sense? Because it's more like a story. Remember, story. It must be a structure. Now let's look at a typical structure of an income statement. And as a financial modeler, the way we understand the concept is quite unique. We make sure we make it more like a layman approach. So please, in case you have any question, you can always ask, type in the chat box as well. Now let's take a look at the typical structure of an income statement. And this is the way I want you to understand it as a modeler. The number one thing is revenue in every business. So revenue is like the umbrella of a business because almost line item depends on the revenue because that is the start of everything. That is the driver of the business. And as a modeler, you want to build any model for any business. That's where the mechanical aspect of it comes into play. The next first thing you ask is, what is driving this business in generating revenue? Should be able to establish any business that is running and they cannot define what is driving their revenue. It's not a business. So revenue is like the umbrella of the business. And management make sure they invest enough so that they can keep increasing that revenue. It's like the umbrella because if anything happens to the revenue, it will definitely affect the whole part of the business from revenue down to cash, down to returns. So you have the revenue, which is like the umbrella of the business, and a good example was done in our pandemic period. And most businesses were unable to generate revenue. For example, the hairline industry, right? What do you think they had to do? They have to relieve so many of their staff, cut their cost, and because that is to tell you how important revenue is. It's the umbrella. Everyone is eating from that revenue. And the first people that eat are people that contribute directly to making sure that we have that revenue. So which means without this cost, we cannot generate that revenue. So it's like you have a head and you have a neck. So that cost of sales is like a neck. You must incur this guy first before you have your revenue. It contributes and it also drives the revenue. Then you deduct your cost of sales from your revenue, we have our gross profit. And this guy is what we call top line item. This is what we call our top line item. Because everything in the business depends on this guy. Cost of sales, you definitely need to incur it. Right? And those costs also change with the level of your output. So that cost of sales also drive your revenue. Revenue increase, cost of sales might also increase, right? I know we have exception, but cost of sales, revenue increase, you expect the cost of sales to also increase. Revenue dropped, you expect cost of sales to also drop, keeping it basic. So this three line item is what we call a top line item because it drives every other thing. Now, the next one are people that are people that are contributing to the firm in one way or the other. Right? We also call them fixed costs. So we call cost of sales, we also call it variable cost. Our selling, general and admin, SG&A, selling, general and admin expenses, or the same thing as our operating expenses, OPEX. People that contribute indirectly into making sure we are running this business. They come into play. So your salaries, your utility, your subscription, your logistic, all those costs, they are all supporting the business. We deduct that, then we have our EBITDA, which is the first profit that comes in form of cash. So in management accounting, you have your revenue, they say you have your variable cost, you deduct that, you have your contribution, which is the same thing as our gross profit. Then you have your what? You have your fixed cost. Then they will tell you you have your plain profit, EBITDA, which is very close to cash because that is the core business operation. From revenue straight to your EBITDA are what we call core business operation. And that's why they want to value business. They will tell you just pick the EBITDA, multiply by the comparable EBITDA multiple, and you have your value. Because that is more like the first true cash that comes into business. So now the next thing is you have your depreciation, you have your amortization, right? And these two depends, they deal with what? How we make use of our assets. So depreciation for assets that you can see, property, plant, and equipment, while amortization is for intangible assets, assets that you cannot see or you cannot touch, the websites kind of thing. Then we deduct that, we now have our operating profit. Operating profit comes into play, then you can have some other income. With the business will be generating revenue from other activities, right? Then finance income, maybe they will be making, they won't leave their cash idle. They will put it in one savings that will be generating interest for them. Then finance cost, maybe they have a loan, they need to finance the expense, right? These three deals with the business financing and investment decision. Then we have our profit before tax. The government comes into play in form of tax. Then we have our profit after tax. Now, from our operating expenses down to profits after tax is what we call our bottom line item. So anytime here, top line, revenue to gross profits, right? Bottom line from operating expenses down to profit after tax. Now, it is what is being left in form of from our gross profit that we cover up every other thing that we have below the line item. So remember, depreciation down to tax can be influenced by management decision when it comes to you comparing one business to another. But we are not going deeper into this one for now. So your ability as a financial modeler is to be able to recognize and identify each line item in your income statement. And then you are now asking, if I want to forecast my revenue, what do I need? If I want to forecast my cost of sales, what do I need? My operating expenses, what do I need? My depreciation and amortization. So there are some line items that might not be applicable to some business. That's where your own understanding of the business also come into play. Now let's now see the components when you want to build a typical model. For revenue, said, what are the driver? What are the component? What do I need? So this business, I'll ask, what are you guys doing? How will you guys be generating revenue? And that will also make up your questionnaire that you share with the client, because they are your number one source of data. So revenue, what will be your price? What will be your quantity? How do you plan to increase your customer base? If it's product that you are selling, how do you plan to increase and sell more? Right? You go to your cost of sales, you're asking what is the unit cost based on the measurement of their products. Right? What is the unit cost? How many quantities expected to be sold at this period? If there's a capacity constraint, you also need to, you have a plant, you have an equipment that can only produce this also number of units, which means you cannot forecast more than the capacity. You have a gross profit, you go to your operating expenses, then you ask, what are your monthly expenses? Right? What are your salary costs? What are your cost of running the business, the rent, the maintenance costs? Right? You have your EBITDA, you go to your depreciation, then you ask, what will be the business assets? Right? What will be the expected lifespan of those assets? So, for example, they say you want to raise $100 million, then you're asking, what are you going to use this 100 million to do? So definitely we're going to buy plant and equipment, and that means on that plant and equipment, that will become their assets, and you can calculate your depreciation on it based on the asset lifespan. You have your other income, maybe the business will be generating revenue from other activity. You have your finance income. At the end of the period, the business don't just leave cash idle. So maybe you assume they will deposit the cash in the bank and use the deposit rate to calculate the interest income on the cash. Finance cost. So you're asking, oh, what are the sources of you getting this fund? We are going to use equity, we are going to use debt. So if they are going to use debt, definitely what will be the loan lifespan, right? What will be the interest rate of the loan? So that will guide you in calculating the interest expense. You have your profit before tax. If there's profit, then what is the tax rate? And you multiply that by your what? Your profit before tax. Then we have our profit after tax. So this is more like a typical way for you to understand modeling. What these are the output that I want. I need to be able to build my income statement, my balance sheet. Then I'm now asking, if I want to calculate the revenue, what do I need? What will be my input? If I want to calculate cost of sale, what will be my input? If I want to calculate the operating expenses, what will be my input? So once you can ask this question and you can answer it, then it will guide you in how you get the data to build this out. Just like the normal way an accountant will do, right? Accountant, they already have the data of the operation activity. and they just pick it one after the other and use it to create this structure. But you as a modeler, you also think the same way. What are the data? What are the things that I need so that I can get for each of these line items? Right? On the part of the balance sheet, quite straightforward as well. Right? When it comes to balance sheet is made up of your assets and funding. And for funding, we categorize that into two: equity and our liabilities. Right? And always know that assets are the property of the business. They are owned by the business. While funding, same thing as liability and equity, they are owned by the business. These people have invested in the business and they need to get something in return. Right? So resources of the business, which is more like how the use of those funds that you want to get. Then funding, those are the sources of funding to the business. Where is the funding coming into the business? So assets are internal to the business. As I said, they are the property of the firm. And then funding are external to the business. Those are the contribution from external into the business. And now let's now take a look at our typical structure of our balance sheets. And you're also asking that same question. So this line item in the balance sheet, if I want to get it, what do I need? What is the link between my balance sheet and my income statement? So for non-current assets, right, we have a non-current assets, we have current assets, we have equity, non-current liabilities, and our current liability. So equity, non-current liability, and current liabilities. On that, the non-current assets, we have our property, plant, and equipment, which you expect to get from your use of funds. I want to raise $1 million. Oh, what are the use of your fund? Oh, we buy property, plant, and equipment, do furniture, set up warehouse. Those are more like assets that can be capitalized in your balance sheet. Because you have some other line item, maybe they want to set up a website platform, people can go to definitely software for a typical tech company. For the current assets, you have your inventories, which forms our element of operating working capital. So that is related to our cost of sales. You have your trade receivables, which is a driver of our revenue. Those are more like operating working capital components. Then you have your prepayment, which are also concept of our operating costs, operating expenses. Then you have some other relevant items, and you have your cash, which will be coming from your cash flow statement. On the part of equity, if there will be some equity investments directly into the business, definitely that will become our what? Investment contribution. Then you have your retained earnings, which will be driven by our what? Reserve from our profits after tax. Non-current liabilities, in case they will be getting funding through loans, definitely you know that you will have loan ending balance in your non-current liabilities. And for the current liabilities, right, also component of our operating working capital, trade payables, accruals, and you could have some other related line item. So your ability to be able to picture the structure of our typical income statement and ask, if I want to do this, what do I need? If I want to do this, what do I need for this line item, for this line item? So that's where, number one, understand the business, understand the structure of the financial statement of the industry. Then go to each line item and ask, if I want to forecast for this line item, what do I need? If I want to forecast for this, what do I need? Right? So now, in line with this, part of what we touched last session was how you create a questionnaire for your clients, because the truth is they might not understand how you need all this your data, and definitely you are not structuring your questionnaire in such a way that you send the income statement to them and you're telling them please fill in this, fill in the driver for each line item. If you ask like that, definitely nobody will answer you, because most of our users don't even understand accounting as such. So you should be able to simplify it in such a way that when you send the questionnaire to them, right, they can understand. Now, let's take a look at this questionnaire that was shared with us, right? It was sent to us via our email, 03 Financial Data Extraction, client response. And let's take a look at it. Now, each of these questions, just ask this question, how does it affect the line item in my balance sheet and my income statement? Now, what is the name of your business? Definitely you need the name for your business, right? Where is your business location? Now, this would be more like a very interactive session, please. So I would like us to let's activate our chat box. So where is your business location? Why do you think we are asking for the business location? And which line item do you think this will affect in either our income statement or our balance sheet? Once you can understand this concept, trust me, we just go to the artistical part of it and just show you, oh, this is this, and it's still the normal way accountants do their own. So definitely tax, I love that. Tax computation, right? Because a business that is operating in US, you cannot use the corporate tax rate of a business that is operating in Israel or in another country. So where's the business location? Oh, that will help you to get the what? One of the macro assumption that you need to drive our tax expense, right? So describe your business briefly. So them, they are telling us products, production and selling of what? Of healthy nutrition bread, right? Okay. Okay, thank you. Exactly. So Toyibu has even added to it. So you understanding the location will also help us to get the accurate macroeconomic data, because you cannot be using the macroeconomic data for a country in Canada and be using the one in USA. So each company, they maintain their own specific economic data. So now the next one is, how much investment do you want to raise? How much investment do you want to raise? Now, let's look at the next one. So this is more like the financial aspect of it. Do you have previous investment in the business? So there are some business like that the owner of the business would have incurred some costs trying to do the visibility study and the all kind of things. And at times, most of them even uh, consider that as their own part of investment in that business, right? Some even decide to take it out from the capital raise, or they just assume it to be part of their own equity contribution. Now, let's look at this next question. What is the funding plan? Bank loan, personal finance, or equity? So they said a bank loan of $100,000. Now, let me ask you, which line item do you think this will help us, or which line item do you think this will drive, this will affect in our income statement and balance sheet? So they said a bank loan of $100,000. So definitely it will affect our cash. Thank you for that, right? Because cash is coming in into the business to affect our cash flow. Finance cost, because it's an expense. So definitely we are going to get interest expense. Yes. Yes, finance cost, I agree with you. What about balance sheets? What about our balance sheet? I think it will affect our balance sheet too. So please, our contribution is very important, please, so that I'm sure we are on the same page. And I'm sure you are getting my explanation as I'm breaking it down. So definitely our long-term liability, exactly. So someone said loan payable, which is the same thing as our what? Our borrowings in our non-current liability. So it also affects our cash, because cash is coming in into the business. Thank you for that. So, and an investor contribution of $150,000, right? So where with that, the impact of this on our income statement, on our financial statements, right? So on the part of equity, right, which is more like equity contribution, right, investment contribution. Which other thing? It also affects our cash as well, because cash would be coming in into the business. So if loans, how many years to pay back? So definitely this will also drive our interest expense, the number of years we need to calculate the interest expense, how long we're going to have that in our what? In our balance sheet. So if equity, what percent of profit sharing are you offering? Now, they said 30% payout ratio. Now, let me ask you, which line item do you think this particular question is driving? So profit sharing, they said 30% payout ratio. How do you think this will impact our financial statements? Retained earnings, thank you, exactly. So that will drive our retained earnings, which will go straight into our what? Into our balance sheet under our equity. Now, the next thing is give a breakdown of how the company plans to use the capital to be raised. So business registration, professional fee, research and legal. Now, let me pick this from furnitures, plant and equipment, websites. How do you think this will impact our financial statements? So these furniture, fitting, plant and equipment, websites. How do you think this will affect our financial statements? So definitely our non-current asset, exactly. So let's make use of the chat box. So it will affect our non-current asset, which means we are going to have our assets in our what? In our balance sheet, exactly. How can it affect our financial statement again? What do we need this for? Then our depreciation in our income statement, exactly. Exactly. Then other line item. So inventory products, this will form part of our cost of sales, right? Part of the product they need to get. Marketing, all these are related to what? To operational expenses. That's that we use the fund to do. Now let's take a step further under the business operation. Please list your product, services, and their respective price. So they've given us that they'll be selling bread, white bread at this price per unit, multi-grain at this price per unit. Now let me ask us, which line item will this drive or will this affect in our financial statements? Which line item do you think this will affect in our financial statements? So definitely it's going to affect our what? Our revenue. Revenue. So someone is saying my screen is not moving. I guess it should be from your head, but I'm still on our Word documents. Yes, I'm still on our Word document. So please list the cost attached to each item listed above. Which line item do you think that will drive? So you also have the Word documents with you as well. So in case maybe due to network, the screen is delayed at your hand, you can just open the PDF as well and follow through. Okay. So please list the costs attached to each of the line item above. Which line item do you think this will drive? Definitely our cost of sales. So that's how to think about when it comes to the financial model. In fact, there's a concept I'm going to borrow from one of my bosses to call it back of the envelope. So you come from the angle of output that I need, and now think about what are the things that I need to build this to get this output to get to this place, right? So list your customer base and expected customer growth for the period. So they've supplied this to us. The target to sell 5,005 units of wheat bread and 500 on monthly. What is your plan for staffing? Those are now related to operational expenses because you need to be very detailed as well. Just the same way we do when we are doing our accounting reports. So the same thing you do for when you are building the forecast. Can you list all the expense you anticipate to incur monthly? So they've made provision for this as well. Now, this last question is always good at times. That can you give a rough projection of what sales would look like for your business? So, and that will kind of guide you into also understanding if the client has done their own rough calculations, right? And to be able to understand, oh, this is what they are saying. This is what the calculation they've done. Is it aligning with the data that they've given to you? Now, part of our assignment was for us to also use that business cycle to create a data. And I'm quite sure you will understand how difficult it was for some of us and the thinking that needs to go into it. So the same thing also applies to your clients. At times, they really don't understand what you need this data for. And trust me, the more the clients supply the data, the better for you. But in the case where they are unable to even give you all this data, then it becomes problem for you because you now need to be the one to go out and be sourcing for those data. Now, also remember, as a financial modeler, you are also a research analyst. You are also a sound research analyst, right? And most times, it's not as if you just take client data like that. You are also a financial advisor. So which means any financial model project you want to work on, you need to take your time to understand the business, understand what is going on in the industry, understand what are the things achievable in the industry, so that you can also provide advice to the owner of the business. So you need to wear a cap of a management personnel whenever you are building a model. So which means you need to take your time to understand the business, understand what is going on in the space of that industry, right? Become a research analyst and also become a financial advisor, because financial models are meant to guide in decision making, right? So with this, I believe we can now take it a step further and we can start with our model build, which means we are going to the artistical part of it. Now that you have the understanding of what this mechanical aspect of it entails. The next thing is for us to now go into the artistical part of it. Now that you have the understanding, oh, I need income statement, balance sheet. Once I have these two, I can automatically get my cash flow. Now, what are the things that I need to build to forecast each of these line items in my income statement and my balance sheet? What are that will guide me in asking the appropriate question, right? So now, in line with this, let's now take it further, and I'm going to let's start with our Excel, the Excel document that we used last session. And this will now take us to the next thing. After you've drafted your questionnaire, also known as information request list, the next thing is you get your data and you now load your data into your model. Now, in doing the artistical part of it, there's something we call fast standard. FAST, let me type it in the chat box, FAST, fast standard. So I will leave us to read more on this. So it's more like a kind of standard that guides how we build our models. And also, if you want to write the financial modeling exam by Financial Modeling Institute, they mark your model using the fast standard. And trust me, this fast standard is unique, right? As a modeler, you just need to know it. So it will also help you to build a model in a professional way. And it guides how you do one or two things when you are building your model. Now, let's extract. Let's see how we extract our assumptions from our client's work brief. Right? So the clients, they've provided us with this. As I said, most times you might not be lucky to have your clients fill up all the answer like this. They will just tell you, please do the research. They believe you're a magician. So wear a cap of a research analyst and also a financial advisor. And also, remember, yes, the fact that it's a model, you cannot be 100% accurate. Where it gets to a stage or a level where the client cannot provide you the accurate data, it's always good for them to state that, you know what, you will do your own market research and be able to put one or two data together, and you will run it by them, and both of you can agree. So don't go ahead, make assumptions, build the model, and then you now send it to the client, and the client will just say, where did you get all these numbers from? So it's always good. Once they cannot provide the data, make sure you establish that okay, you know what, I will do a market research and be able to get data for all this and share with you so that we can both agree. Now, with this, let's now see how we build out our input worksheets. So this one, let me save it on my file as another version, as another copy. Let me save it. as another copy. And here, we just use this so that you also, from the business cycle, you see how we pull that out. So the name of our business is Van Baker Limited. So I'll just come here. Let me change this. So let me just say this will become our input worksheet. We can even call this assumptions. Assumptions. Don't worry, you can look at my screen, understand it. After the session, we also share the recordings with us so that you can use that to create your own. Right. So I'll just do this more like a rough work. The next session, we get started with how you build your model templates in a very, very professional manner. Okay. So here, let me just let me create. So let me call this our description. Let me call this description. So what we want to do is we want to extract those inputs. We want to extract it into our model. So call this in our description. This is our unit. This is our input. Right. So let me reduce this. Reduce this. Then I can call this. This should be my, let me say this is year 1. So up to 5 years. So we need for 5 years. Let me align it to the right. Reduce this row a little bit. So I don't usually like using this grid line. So let me remove the grid line. Okay, let's leave it. Let's leave it for now. So here, let me just put this in a color so that it just kind of look good. Okay, so we have it like this. And then I can freeze my panel. Freeze my panel so that when I scroll down, this up here is still intact. Right. But let me remove the grid line. Go to your view, then untick this grid line under your view tab so that it looks like this. So this kind of look more like a notebook. Right. So under our general data, so let's just put some general things that we need for our data. So here I need a days in a year. All right. So I'll call it a days. So just let's just look at how I'll put this up. Then I'll do example for us. Then your own task will be to complete this using this same approach. So days in the period. So I'll just use this our input cell style. All right. So as part of building our model templates, we also recommend a video for us, which was a session I did earlier, so that you can understand all these cell styles. So standard the same whenever you are building your model, all the data in your model must have a clear and clean description. So what are the input at coded value? What are the cells that contain calculation? What are the cells that contain link cells? So you must be able to describe that. Okay. So I'll just put this as 365. Right. But where you have a full typical date, I think maybe we should even use that. Okay. You know what? Let's use that so this is 31st 12, right? 2023. So which will become, so anytime you are building a model, always remember your model must always have a base period. So Ctrl+Shift+3 to turn that into a date. Then my start date will be end date for previous period plus 1. So Ctrl+Shift+3, we'll call this. That's okay. So let me move this. Let me move it down here. Call it period start and period end. Period end. Right. So for my end date, I need a day. So I need month in a year. Okay, quick observation. There's no FY end in the questionnaire. It will be interesting to see how the model will look like using a year end difference from December. Okay, I'm not sure I get that. So there's no FY end in the questionnaire. So okay, good. So part of what you also need to ask is to be able to understand when do you expect your financial period to start. But most times you can always make it very, very flexible, such a way that they can change the period and the model still updates automatically on its own. Yep, very good one. So you can ask, but I'm not sure. You can just ask your clients, when do you hope to start your business operation. And I think that should drive that. So months in the period, I think that should be 12. Okay, let me just put it here. So that will be 12 months. Right, so I'll come here, put my equal to e date. So this is where e date comes into play. This is my start date, comma, and this is my month in a year, which is this 12. Right, close the bracket, enter. So Control Shift 3 to convert that into date. So I need a period end, so -1. That will give me January to 31st December, and I can copy that to the right like this. So we have our typical full year up here. Now, so make it look good. That depends on you. So I can just make this something like a light blue, so that it just kind of look like this. Okay, all right. So one other thing you can do is to also put in here so that your model can be very flexible. So you can call this model. So you call this model period start. So you call it model period start. And we can put this as an input. So maybe we are saying no, the model period start will be 01 2024. Right? Control Shift 3 to put that into date. So once I have this, I can even use my name manager, my name box, click on my name box up here. So as to be a very sound financial modeler, trust me, your Excel needs to be top notch. Yes, there's no two ways to that. There's no two ways to it. Okay, so I'll call this my model start date in my name box. Right, once I do that, I can come to this 31st December. I will delete what I had there before, and I'll type equal to, because I've renamed this cell that contain my model start date. So it's going to show me as model start date, right? -1. So this become our base period. So even if they decide that, oh, you know what, we are starting in October 2023, all they need to do is to come here, right? So October 2023, they put in here, and you can see automatically the date will just update itself, so that you just build in that flexibility. So let me turn this back into January 2024. So for this date, we can now get our accurate date in a period, days in a period. That will now be equal to the current end date minus previous end date period. Enter. Can copy that to the right. So standard is also saying left to right consistency. You put a formula in year one, and you can do what? Just copy everything for the other period. So any other data that we need, we can always come back here and put them there. Right? So for the macroeconomic assumptions, so make sure your model is well structured, well laid out as well. It's very, very important. So on the part of the macroeconomic assumptions, and this is very, very important when we are building our model. So by the time we get started with the calculation, I'll also show us the impact of this. It makes provision for time value of money. And I will give you a good example. I'm sure irrespective of the country you are, as at 2 or 3 years ago, if you take, let's say, $500 to a supermarket to get something, as at 2 years ago, we get some provisions, right? That same $500, if you take it to a supermarket today, currently, I'm quite sure you will know that the same provision that this 500 would have gotten you as at last 2 or 3 years, you cannot get it the same amount today, because there's an increment in the prices of those products, which is the concept of inflation effect. And we usually have this good example of time value of money that, oh, you know what, let me give you $100 today, or you wait and I give you $200 in the next 2 or 3 years. You now ask you, which one would you prefer? Because what? $100 can buy $100 today. It could be next year. $100 might just be able to buy something worth $50 or $60. So it's better you collect it now. So that's it. Applying forecast. Yes, we are telling you that you'll be spending this amount monthly on your operational expenses. But $5,000 today might cost you more tomorrow, might cost you more the next 2 years, might cost you more. That's the same concept that we put in our model. So first one, I'm going to call this our cost incremental factor, right? And under this, where's our business? Where's the location of our business? So Colorado, USA, right? So that means we need our US inflation rate forecast. So every country, they kind of have their own inflation forecast, and these are more like the data that you can get online, right? So let me do a very good example for us. I can open a browser. As I said, these are more like data that you can also get online. So here I'll just type US inflation rate forecast for the next 5 years. So there are different sources that you can use. So let's say, for example, this is one, Statista. So you could also build in different scenario where the model can consider different inflation rates forecast. But for this, let's just check the Statista and see what they have. So our forecast is starting in 2024. Remember that. So they are telling us that the inflation rate would be around 2.3 to 2.2. Let me just put this in our input. Put it in percent. So they said that would be 2.3, right? For the following period, 2025, 2.1, 2.1. Then the next year, 2. So 2%, 2%, and here 2.1. So most times it's always good. You can also quote the source of your data. So at times you can copy the link here, come to your Excel. At times, if you prefer to put it by the site, you can put the source. You can put it like this as well. But most time, because you finish building your model, you might want to print it out. So I don't usually like putting it by the side. So what other thing I usually do is to just add a comment here. So add a new note, right? Right click the cell, right? And I can put source here. Then I can paste that link inside here. So that's easy for anyone. They're asking where's the source of the data. They can always check this and see. Right? Any question? Any question? Any question? So, which means at the time we are saying, oh, I'll be spending, we have an expense that will be that we need to spend like 5,000 monthly. Then we need to be able to consider effects of inflation on it. But when we get to the calculation part, we take a look at how we do that. So we have this for what? For our cost incremental factor. So if cost is increasing, definitely we need for pricing. We also need for pricing incremental factor. So for the pricing incremental factor, we have two approach to this. One is saying, yes, it is true that costs can increase, but most times in the reality of it, the rates at which inflation increase, we might not see the same impact on pricing. So which means we are making two assumptions that one, increment in our cost, can it be transferred to our client? If the answer is yes, that means the same inflation rate that will drive a cost will also drive our pricing. But another concept is also saying whenever you are building your model, always make sure you under forecast your revenue and over forecast your cost. So that when you get to the reality of it, right, is either those costs are not up to what you forecasted, and you not generate a revenue that is more than what you forecasted. We call it more like a conservative method, right? And there are some industries such that you are not the one controlling price. So which means you cannot just decide to increase your own price because inflation is affecting cost. So in that scenario, we now said, okay, you know what? One, we are saying increase in cost will be transferred to our pricing. So which means for the pricing, we are now going to have two scenarios for that. We're going to have two scenarios. So first one, so I'll just put something here and I'll say cost inflation applied to cost, applied to price. So which means we are saying, can we transfer the increment in our inflation? Can we transfer it to the increment in our cost? So here, I'll just create a data validation. I'll go to my home tab. Go to my data tab, right? I believe you all know where data validation is. So please, in case your Excel is not up to speed, you might need to work on that. So here, I'll just type yes. So I'll just type, let me just type true and false. Type true and false. Click on my OK. So I can just put this in so that it's easy to know that this is more like a data validation. So here, if cost can be applied to price, so which means we are saying the increment factor in our costs can be transferred to pricing. So if that's the case, that means our inflation rate will be what? USO. If not, there's something we call CPI inflation rate forecast as well. So let me copy this. So because of our time, let me just move fast. So this, you can also get this data online as well. You see the same way I search for US inflation rates, the same thing. But just because of our time, let me just divide the inflation by 2. So CPI most times is always lower than the inflation rate, right? So it's because of our time. But your home, when you are building this, remember, you need to just do your research and be able to get the accurate data. But because of our time, so which means for our cost inflation, we are now going to, because we are creating that scenario that one can increment in our costs be transferred to our client. If it is yes, we are using inflation rate. If it is no, then we are using the CPI rate. So I'll come here and I'll put my equal to if this guy, so that's one of the reasons I use true and false. So if this is the logical, I'll keep that constant, comma, which is I'm saying if that cell is true, right, then select the inflation rate. If not, select the pricing CPI rate. And I can close the bracket and press enter, put it in percent. I can drag it. So if I change this back to false, so which means we are going to have our what? We are going to have, let me put it in border. So which means we are going to have our what? Our CPI rate driving our pricing, which will be lower than the cost inflation rate. So any question? Any question? This, I think is clear, right? I hope I'm breaking it down enough. Any question? You can unmute, you can type in the chat box if there's any question, please. Okay, all right. So as I said, the recording will also be shared with us so that you can lay your hand on it and do this on your own. Okay. So other macro things that we need, I think we're also going to need our tax rates. So just have to call this provision for tax rates. So we can only make provision for tax rate because when they get to the actual business operation, the tax might be different. So please, what is US corporate tax rates? Anyone want to help us with that? Anyone? US tax rates? Can you help us type it in the chat box? So remember, if your business is in Nigeria, if it is in Canada, if it is in Congo, if it is Ghana, anywhere, know that you are applying their own macro data. And that's why you can see that I'm putting the name of the country there, right? So if I'm supposed to use US, USCP high rates, okay, so someone said 21. Okay, so please, you can always check. Please make sure when you build your model, you must be able to defend all the assumption you put in your model. Okay, all right, so provision for tax rates. So in case we need any other thing, we can always come back here and put it under the macro. Okay, so then the next one is our financing. Financing. Now let's look at this. Our financing. So this is where we now get started with our questionnaire. So first thing we need is our sources of funding. And I think they are making use of both equity, right, and debt. So we have our values in US. So I'll just put my USD like this. So this unit is always very, very important. It gives a description to the data that you have in that row. So here, our equity, I'll come to my questionnaire. How much is our equity? So equity of 150, come here, 150. Then my debt is what? Debt is $100. And I can put my total here. Just sum these two together. And sum them together. So we also make provision. So in case there might be some other funding. So when you build that model, let's make sure it is very, very flexible. Because you want to bring in another equity, it's easy to flow that in into the model. So we have source of funding. They also need to have our cost of funding. Right? So we need to have our cost of funding. So for the debt, what is the debt period? So this will be in year. And that will also be just be a single input cell. So do we have any information on the debt? Okay, how long, if loan, how many years to pay back? So they're saying this will be for 4 years. Put 4 here. What is the interest rate? Now, most times it might be difficult for them to also uh, get the interest rate because of what they've actually not approached the bank yet. So this model you are building is also part of their visibility work that they are doing. So most time what I usually do is I'll just go online and check for, let's say, business loan interest rate in US, right? So you can see SBA a loan, so around 10 to 50%. And I think country also have something we call benchmark rates, benchmark rates that you can also use in the model. So there's always more like a central bank benchmark rates, which you can also apply into your model. But as I said, always remember you should be able to defend everything you put in your model. So for this, let me just copy this percent format and I'll put it here. Right, so maybe we'll just put it as 15%, 15.5%. So you need to do a lot of research, be able to defend everything you put. So this is for dividend payouts. And what do we have for the dividend payouts? Because that would be more like a yearly thing. So dividend payouts, I said that will be 30%. So I'll put this as 30% for the 5 years. So you can see how simple it is, right? Create it, make sure the structure is consistent, very neat. Anyone can go through it and they can understand what you've put together, right? So here, under the use of funds, then I will go to the questionnaire and ask, give a breakdown of how the business plan to use the funds. So business registration, professional fee. So here I can just make sure you are always professional, keep it clean and simple. So here I can categorize the use of funds. So let me call this registration, and licensing. becomes one header, right? I can have my assets, another header. So just you trying to create, make sure it looks good. So here, business and registration, professional fee. So I can split that, call this business registration. And I can call this professional fees, maybe professional and some legal fees, right? So USD, put my currency. And here, I can just put it under the period that is coming into. So they said both of them would cost us $3,000. So I can just divide it between two of them, 1.5. Then the next one, research. So research and development. So how much? They said they spent 2005. Research and legal, 2005. So 2005. I'll come here for that 2005. So I'm also making provision for others as well. So make sure you are professional when you are putting your model together so that anyone can pick it. So here, assets, under the assets, what are the things that we need? So we need our furnitures and fittings. So our furniture and fittings. So we need our furnitures and fitting. Which other thing? We need our plants and equipment. Plants and equipment. Then we need which other asset they're going to have. Then they have websites. You have their websites. Let me just copy this. Let me work smart. Copy this format and I'll put it here. So furnitures and fitting, how much? They said 15,000. So 15,000. It's always good to always confirm those data so that client will not tell you they provided you another thing, you've extracted another thing. So always need to be very careful. Then our website is just $3,000. Then the next one, I think you're going to have inventory. So let me just remove this piece. So we're going to have inventory. So they will need raw materials that they need to buy for the production. Copy this. Put that here. So they said that's $75,000. $5,000 for raw material. Then I think other things should be related to, okay. So it also depends on how you want to categorize it. So I think there's also marketing. So let's also create a section for marketing and awareness. Marketing and awareness. Then here we can have the marketing and advertisement and advertising. Then they said you're going to have some PRO kind of thing. So I can copy this format and paste it down here. Then how much for the marketing? So they say marketing will be $30,000. Then for the PRO, $10,000. Then other things are related to operations. So I'll call this operations, more like a pre-operational expenses. So let's just call it operations. So prepaid rent. So they need to prepare some rent, right? Then they need to prepaid insurance. Prepaid insurance. So which other thing? So okay, then I think they're going to have more like a working cash. A working cash for operating the business. So copy this. I can put them here. So prepaid rents 15. And here is 5,000. So this, let me remove this from input sales type. And also always remember the total use of funds must always be equal to your what? To your total funding required. So if I sum this up from beginning, from our business registration down to the working cash, I'm getting 183,500. And how much are we asking for? We are requesting for 250,000 USD. So which means the difference is what we represent our working cash. So to get that, I'll just use a formula in Excel. I'll say equal to this is my total funding that we've requested, 250, minus the summation, the sum of all the expenses that we've listed from business registration up to what? Up to our prepaid insurance. And I'll close the bracket and press enter so that at any given time, in case they want to change any of the use of funds, this working cash will always automatically update such that the total use of fund will always be equal to our total capital request. Okay, yes, Assis, your hand is up. Any question?
Yes, please. I can't see the formula bar. Please, I can't see the formula bar. Like there's nothing displaying there.
Okay, maybe your screen or your network, but don't worry, we'll share this with you, and you are still going to recreate this on your own. So I'll share the
Okay.
recorded session. Yeah, I just want us to look at it, understand any question, we treat it, so that when you are doing your own, you kind of understand the whole thing.
All right, sir. Thank you, sir.
Okay, all right. So financial modeling is best when you are doing it yourself. It's good when you see someone doing it and you think you really understand. So this is what I'm going to do. I'll stop here today in our session today. So I've extracted this, and what I want us to do is watch this video, use this to create your own. I'm not going to share this file with us. You also need to do it yourself. Then go ahead using this our structure, extract the revenue. Make sure you lay it out as a professional. Extract the revenue, extract the direct cost, and extract operating expenses and operating working capital. That will be our own assignment against our next session. Please, submission of this will qualify us and to attending the next session. Please, that's very, very important. And that's how we see our commitment towards this as well. So please, we'll stop here today. We've seen the way I was doing the extraction, laying it out in a professional manner. Share this video later with us. Create your own. Go ahead, extract the revenue, extract the cost, operating expenses, and make sure you lay it out such a way that anyone can pick it up and understand what you have done. All right. So let's stop here today. The next week, we'll continue from our extracted assumptions, and we start with the model build, which is the calculation aspect of it. And you can see how simple financial model is, right? Just that the way some people kind of teach the concepts make it look as if it's hard. Right. So once you've extracted your input, you're almost done with your model build. Just to go to the calculation build schedule for each of those line item, and you link them to your output. All right. So thank you, everyone. Thank you for your presence in the session today. I know it's weekend. Most of us, we have one or two things to do, and we still manage to make it to this session, and that's the sacrifice that you are making. So once again, and thank you, everyone. In case you have any question or um, clarification, you can just stay back for a few minutes and you can ask. Please, can the recording be shared today so we can rewatch within the weekend? We try our best and work towards that. All right. So I thank you, everyone. I thank you for your presence in our session today, and I promise you have a nice weekend ahead. So see you in our next upcoming session. So thank you, everyone. Thank you.